As you can tell, it's going to be a very busy week when it comes to earnings front, but certainly on the central bank front, it's going to be pretty busy as well. Headline act, that Federal Reserve meeting that will arrive at 6 a.m. in Sydney time on Thursday morning. To get across that and everything else this week, Pete McGuire is joining us from XM. He's coming to us live via Skype. Pete, welcome to the show. Great to go and kick off the trading week with you. Wow, that Fed event looms large in the calendar. What are you expecting the Fed to go and say on this occasion?
Well, good morning, David. It's going to be, as you mentioned, it's going to be certainly a big week, and it's exciting. And it's full steam ahead now. We've put January behind us. So there are mixed signals coming from the US economy. I think Fed Chair Powell and his gang are very conscious of that. The inflation story, what's happening globally. You've had solid earnings, really, with the equity markets over the last 3 to 4 weeks, or 4 weeks for certainly US equities, and how they're going to report this week, some of the big kahunas. So if they go well, those big boys, then it's going to add, I think, a level of support to Fed Chair Powell's rhetoric. But if they perform poorly, then that's going to change, I think, the mood and sentiment as far as what he sees. And then you're looking at headcount and NFP on Friday. So yeah, it's a big week ahead.
Just on that labour force side of the equation, we know how much weight the Fed is putting on the services side of the equation, linking it back to the labour force. Last week's initial jobless claims data in states fell to fresh cyclical lows, which suggests that rather than letting staff go, we've got a lot of employers actually hoarding and retaining staff more. Is that going to be problematic, do you think? Do you think the Fed will go and express some concern that that is actually taking place at a time when inflation is still pretty strong?
Well, yes, David. I mean, every particular sector has its own headcount issues. We all understand there's a war for talent out there because there's there was plenty of work for not enough workers, and it was the same situation in New Zealand, Australia, and pretty much across the developed world. So how that plays, we understand if you're looking at non-farm payrolls over the last year, they've certainly been in a downtrend. The January figure up until the middle of December, which was released earlier this month, was around 175,000. So let's see how it is on Friday for the numbers up until mid-January. And the overall thoughts are that if you want a job, you'll get a job, but are you getting wage rises to match inflation?
A really key part of the puzzle as well is what's going on when it comes to financial conditions. You know the Federal Reserve has been hiking rates, but the market has been pricing in the likelihood we'll see rate cuts coming through at the second half of this calendar year. That's really loosened financial conditions. When it comes to what Jerome Powell might go and say and talk about push back against markets, we've heard them say umpteen times that they're not looking to go and cut rates this year. Do they need to get more forceful, do you think?
Well, yes, David, I think that probably that will all develop over the first quarter. So as far as rhetoric and market sentiment and the interpretation of his wording. The other side is, what do we do as far as rising energy costs? We're conscious as far, nearly a heat wave for a winter conditions across Eurozone. So that's been a good sign. That's helped from an inflation side, but you've had a rise, US dollar fall and rise in energy costs. And is that going to continue over this quarter, which in turn creates more angst for consumers? So yeah, Fed Chair Powell's got his hands full, how he reads the market, interprets it, and then tells us, the consumer public, what their actions are. And if there's no sign of loosening in 23, then it could be more rate rises ahead due to higher energy costs.
It's not the only central bank at bat this week. We have both the Bank of England and ECB also with decisions coming through. Both are expected to go and hike by 50 basis points. So when it comes to what's going to be driving market movements after that, do you think it's going to be the actual rate increase or what is said afterwards by the various central bank chiefs?
Well, from a currency standpoint, I mean, you've only got to look at the euro. It's nearly at that 109 handle. You've got the pound nearly at 1.24. So they're both anticipating that those 50 basis points are baked in. And do we see further strengthening for both of those currencies against the US dollar, which has certainly had some, had a rock attached to it, or nearly a granite boulder, pulling it underwater at 101.92. So yes, I'm looking to see what their actions are, what their rhetoric is, market sentiment coming from their comments. The other side is, I think the Bank of England is in a more dire situation with economic growth than Eurozone. But we've just got to see how all of this, I suppose, transpires over the next couple of days and where that leads currency markets.
We know that central banks have been the dominant force for a long period of time in this pandemic year, or whatever they've wanted you to do has pretty much been a good trading success story. What about the earnings side of the equation? Because this week is going to be an absolute massive one for US corporate earnings, particularly from those tech titans. Is that something that could potentially go and even override what the central banks have to say?
I would think so, David, because of the sheer market capitalisation of those. Let's look at those four firms, and the pullback that we've seen across many of them as far as value in the last year and a bit. So yes, that's going to be, I think, inhaled by Fed Chair Powell and his team. They'll be understanding what market sentiment is from their own CFOs, looking at headcount cuts, and some of them are quite severe, and we only appreciate about 200,000 have actually lost their roles in the last 12 months in those sectors. So is that going to increase or accelerate, and how that's going to be interpreted from naturally performance moving forward, and all of those components go into the melting pot for share price.
Is there any particular one of those companies that you're paying pretty close attention to when they release this week?
Well, I'm looking at all of them because I'm more interested to see how they're performing with the NASDAQ itself, and whether we see a pullback or whether we just see, a consolidation. But pardon me, but we've certainly seen a very solid move over the last month that you can't deny. And I'm just maybe some of the sunshine and hot air is going to be evaporated from it. I just want to see the numbers. I'm looking at all of them, David, none in particular, because they're behemoths, all of them.
Yeah, absolutely. Well, it's been absolutely a rollicking start to the year, particularly for the NASDAQ, but the S&P 500 itself is up over 6%. We'll see what this week brings. Pete, thanks for joining us here on The Drop.
Have a great week, David. Thank you.